Hey everybody, Tim Knight. It was a pretty cool trading week, but I've got weirdly little to say. I hope not to prove that point too much. But I've been really racking my brain, like what content can I possibly create this weekend? So I might be kind of thin this weekend. There's really not much point in me going through like my 72 different short ideas because they're almost exactly the same as I showed you last weekend. So I don't want to waste your time and mine on that. Yeah, just not much new to say. So what I thought I'd do is just make a few posts this weekend, maybe just 2 or 3. This one is going to be just thumbing through 20 long-term futures contracts. Some I'll say almost nothing about, some I'll say a few things about, but just kind of get the lay of the land here with some important markets. So let's just walk them through. We start off with Brent crude oil, and this goes back to 2007, and we can see the pre-financial crisis top. We can see, I don't know what name for it exists here, but this other much bigger top ranging from 2010 to 2014, and then this base here. Remember how crazy it got with negative crude oil prices. Those aren't reflected here, but literally some contracts were negatively priced. How times change, huh? In any case, I don't see anything bearish about this chart. I don't really touch energy anymore. I tried to get cute and get bearish on it early this year. I lost every single time and decided I'll just let TNR make all the money with energy and not mess with this crap. So I don't touch it. And so frankly, that probably makes my opinion a little more objective right now. That's looking pretty solid to me on the long side. So there you go. What else is there to say on that? There's more than one crude chart. Some of these go back farther than others. I don't know what BZ is. Well, it's Brent crude, but it goes back to 2007, whereas this one doesn't go quite back as far. This is crude oil, just a good old CL we all know and love. So we have a big top here, a huge top here, and then more recently we had this expanding. It's kind of a wedge, but it burst through thanks to the invasion of Ukraine, and really has never looked back. So it went to a huge peak here, found support, another push higher, found support. I guess maybe it could erode its way back into this zone, or as before, this could be kind of a support area for it. It's very tough to read right now. I guess this, more than anything else, is at the mercy of geopolitical events. Here's DJ, Dow Jones Futures. This one's a little easier to read. We've got this absurd bull market here and an attempt at a top here. It looked like we were done at this point. Like, well, sorry bulls, your days are over. And then this crap happened, this May 14 to 29 thing. So it's messy. Now we've at least still got a series of lower highs, bang and then bang. But goodness gracious, I mean, this is just a tease. It got down here and this stupid thing happened again. So I'll remember March 14 to 29 to my dying day. Piss me off. Here's ES. The S&P 500 futures goes all the way back to 97. And we got a, market top. This is when markets were kind of semi-organic and normal. And then the perversion began here. And this one, we've got, again, sloppy breakdown here. Look like we were golden. And then this stupid March 14 crap started. So that's when we got this thing, and up it went. So still a big fat mess. I'm finding individual charts much easier to read these days than the broad market. This kind of is another good example of a fake out. This is the CAC 40 futures, France, I suppose. Top, and another top here. And here's a great example of a fake out. If we just ignore this little chunk of data right here, just in your mind's eye, just eliminate that little blob, you have a perfect head and shoulders pattern. Left shoulder, head, right shoulder, neckline, fall, retrace, resumption of the fall. This idiotic nonsense right here Bleh. So just squint your eyes tightly, pretend it's not there, and you've got a perfect pattern on your hands. Now, if you want an example of how badly bonds have fallen, I present to you the 5-year T-note. Good God Almighty! Look at this. This has fallen as far as it is here, except instead of taking like a decade, it took months. Just absolute calamity, free fall, collapse. I've got a really dumb question, and I'm serious. This is dumb. All those instruments that governments have bought trillions and trillions and trillions of dollars on, isn't this a loss for them? I mean, I know it's them and they can, make up any numbers they want, but I mean, they did pay these prices, right? So, dumb question, I'm sure, but it just seems to me if you buy trillions and trillions of dollars at these prices and it goes here, that's not a good thing. But what do I know? I'm an idiot. Here's gold, GC. Now this one goes back to 94, and I'll show you later one that goes back farther. Looking pretty good. Looking pretty good. It's slow, it's boring, it's dull, but it's doing the right things. We've got our bullish base here. We had our exciting explosive move higher, it collapsed, but it did not break the bullish pattern. This still looks fine. So I'm liking what I'm seeing there. I don't understand at all the nuances, the importance of what's going on with the ruble and the gold backing thereof. But listen, anything that makes gold go up, I'm a happy guy. Heating oil, this has been such a fast descent. It's just like eye-popping. I can't even comment on it. It's like, gosh, it sure went up a lot. And gee, I bet Europe is not too pleased with that. But this is freakish. Decades and decades of relatively normal movements, and then this. This is one for the books. Here's coffee, also quite expensive. I used to work for a very famous futures trader. This is the kind of futures move that where fortunes are made or lost. I mean, these are incredible moves and very fast. Lumber, this actually has been falling fast. Probably because of home building. It actually peaked back in about a year ago, and it did another lunge higher, but it was a lower high. It didn't reach it, and this has been falling hard ever since then. So that seems really tired. Again, I suppose because with soaring interest rates, the home builders are not going to be doing great. Lumber's anticipating that. Nikkei, this is another great example of a fake out. This looked like an amazing, just massive kind of a Dolly Parton pattern, let's call it. And then you get this stupidity here. But it's working its way back down below it again. Here's the NQ. This one's not terrible. This one is, for all my bitching, this one's not so bad. We do have a pretty good top on this, and boy, is it a big one. I mean, look at this thing. This was the pre-COVID crash top. Get out your magnifying glass. There it is. That little pipsqueak tit right there. Look at this thing. This is gargantuan. This is like, I'm going to kill you all kind of size. This is nothing down here. Palladium, ugly. Don't trade it. Not interested. Gasoline, it's kind of like heating oil. Just eyes bug out. Can't believe how fast it went up. Probably a favorite here, the Russell. My fondness for this, the small caps. We're working on it. We really are. We've got this range here. We have got to break this level. If we can break this level, the world will end. And that is a big top. But we're still monkeying around in that range right now. Sugar, pretty clean channel there. Pretty clean. Looks close to a peak. S&P, SP, I've never even heard of that, but I guess it's identical to the ES, or maybe that's the normal size one. I don't know, but nothing else to say because we just talked about the ES. There's wheat, tremendous move. Again, the kind of commodity move that history is made of. YM, the Dow Jones Industrial Futures. We saw DJ earlier, one and the same. And then finally, and this was the point I was making earlier, here's this other gold I've never heard of, ZG, trade on the ice, but it goes back a lot farther, which is why I feature it here. This goes back to the 70s. And you can see my fervent desire is for this to be kind of like this. Time will tell. Thanks, everybody.